Cool, just good to see how you're doing, how you've been. Even Miles of CMF, talk, good to see as well how you're doing. Even Miles, how's things? Things are great. Good to see as well, Tistic, how you doing. Stormy, hi Miles of CMF, good to see as well. Stormy, how you doing? All of you came in pretty much at the same time. You're the first ones and all four of you. All right, Big Truck, what's happening? What's in? Good to see as well how you're doing. A lot of things are happening, which we're going to cover on tonight's live show. All of it, to be pretty much honest, there's all of it is pretty much extremely positive news. What's happening right now inside the crypto sector, of the banking sector, crypto sector, the institutional side. It's all positive on tonight's live show. So let's do intro, disclaimer, what we're going to talk about tonight's live show, and then by that time, everyone should be tuned in for the first part of the live. So welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune into this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This is episode 463 of the CMF live show I was watching right now. And these are the topics we're going to cover on tonight's live. There's quite a bit to go through. So we're going to talk about essentially Bitcoin's price point still hovering around that $70,000 essentially range. We're going to talk about essentially the latest market essentially analysis in terms of indicators of what's going to be happening to Bitcoin's price point for the rest of crypto space to be following in suit, or even we can talk about decoupling now because we're getting our final draft of the essentially Clarity Act. We're also going to talk about Morgan Stanley essentially entering more inside the crypto space. We're going to talk about BNY Mellon entering the crypto space and having some essentially perspectives on the crypto space even more. We're going to talk about Wall Street and essentially Bernstein's on tonight's live shows all regarding the crypto space. We're going to talk about essentially Parafire Capital also regarding the crypto space as well from Bloomberg. We're going to talk about Invincico also regarding the crypto space as well. New York essentially stock exchange partners regarding the crypto space. There's so much positivity happening towards the crypto sector right now. We're going to talk about Tether also on tonight's live show as well regarding essentially how they're expanding and trying to become legitimate, you could pretty much say. We're going to go through news on tonight's live show regarding Coinbase and also their newest perspective on the crypto space going forward. And also we're going to talk about essentially XRP and Swift. We're going to talk about XRP and Brazil. There's quite a bit essentially to cover, as I said on tonight's live show, and it's all extremely pretty much positive. So the first news we are going to be covering is regarding Bitcoin's price point still during this essentially war that's happening and ongoing still. But before we talk about that, let's go into that conversation first, and then we go straight into the first news. And as I said, there's so much good news to cover. So let's see where we're at. Even Miles and CMF, Manny, good to see you as well. How you doing? Hello, Miles and CMF, Scott, good to see you as well. How you doing? Share the live. Let's go, Scott, for saying that. Did you open a new X channel because I didn't receive notifications on X anymore? Just YouTube. No, I haven't opened a new X channel. This is my only X channel. It's the one with the blue tick, and also my name is on it as well, Miles Nadimian. I hope that everyone had a great day or evening. Let's go, Scott. Me too. Morning, Miles of CMF. Good to see you all, Shelly. How you doing? Morning. Good evening, Miles of CMF. Free and forever. Good to see you all. How you doing? Ignore my YouTube comment. It was my mistake. No problem at all. What about Miles and CMF? Ray, good to see you all, brother. How you doing? Addy, good evening, Miles and all CMF. Let's go, Addy. By the way, thanks so much to everybody who has straight away liked and retweeted this live show on X, and thanks so much to everyone who's also essentially liked the live show on YouTube straight away as well. If you haven't, take a few seconds to like and retweet this live show. So, first news on tonight's live. Bitcoin essentially slipping below the $70,000 essentially as crypto equities face a sharp sell-off led by essentially Circle. So what happened? It seems like the Clarity Act and the Genius Act that is essentially intact together and pretty much intertwined together that's about to be passed. It seems like projects like Circle might slightly struggle, whereas projects like RLUSD will actually do a lot more better. So here it is. Bitcoin has retreated below the psychological $70,000 support level once again, triggering a broader cooling period across 2026 digital economy. This downturn, essentially momentum, was exaggerated by also significant 16% slide on Circle stock, which acted as a primary catalyst for a wider sell-off among publicly traded digital asset firms. Analysts also suggest that this correction reflects a temporary de-risking phase as the national financial infrastructure adjusts to shifting liquidity conditions and the traditional essentially banking sector that essentially are recessing its short-term exposures to decentralized settlement layers. To the market downturn, it also highlights several key points of friction the modern financial plumbing is right now going through. As I said, we have pretty much our final draft of a Clarity Act and also essentially a Genius Act and the yield situation when it comes to the crypto sector or stablecoin sector. And it seems like the banks are going to get that one particular win. That isn't good essentially for projects like Circle with their USDC, hence why Circle's stock plunged pretty much 16%, but it is good for RLUSD. Equities leading the ledger. The sharp essential decline in crypto linked stocks suggests that institutional sentiment is currently being driven by equity market volatility, essentially professional allocators to access the global ledger. Stablecoin issuer sensitivity. The slide in Circle's valuation underscores the market's essentially heightened sensitivity to operational and regulatory environments for stablecoin issuers, even as the firm works to align with the transparency goals of the US Clarity Act. Testing global support zones. As Bitcoin tests lower technical levels, the focus essentially remains on the resilience of the world's financial architecture and also whether the essentially high utility demand from corporate treasuries can provide a meaningful floor against further systematic pressures on Bitcoin's side. As the market navigates this period of uncertainty, the focus remains on whether the current retracement is a healthy constellation or the start of a more prolonged defensive posture for Bitcoin. Analysts also suggest that the 2026 global economy is currently in a transition phase, where essentially efficiency of the Genius Act is being balanced against the established risk management standards of the legacy banking system. This is what CoinDesk released today, essentially. Moving forward, the industry is watching for a stabilization in equity prices to single essentially a return of confidence in the underlying settlement, ensuring that the long-term trajectory of digital commerce remains intact. Simplest way to put it, Circle is not looking too good. The banks seems like they've won one thing, while the rest of the crypto space can win everything, essentially. In terms of yields, that might not be coming to stablecoins, but in terms of the essential regulations being passed, that seems much more of a higher chance now. The banks got their one win, while the rest of the crypto space gets every other win, essentially inside the Genius Act and essentially the Clarity Act and so on. But that doesn't play out too well for projects like Circle through USDC offer some sort of yield to everybody that uses it. Hence why Circle essentially stocks plunged, essentially regarding this news coming out. But it also does show us that we're pretty much extremely close to that finishing line even more right now, which is why for the past week I've been sharing news with everyone on this live show regarding more institutions and more banking activity regarding the crypto sector. And I said that these banks and institutions wouldn't take such large steps inside the crypto sector if they weren't, reassured or essentially confident enough that this Clarity Act and this Genius Act is going to get passed either way. But at least they got their one win, while the rest of crypto space can get every other win. By the rest of crypto space, I mean crypto projects that actually have utility. The ones that really don't have utility and have been bluffing for all this time, they still don't bring anything towards the table. But the crypto projects that have actual utility, like XRP, one example out of many, is going to do exceptionally well when these essentially regulations pass through, which is extremely close to that finishing line, even more than ever before. Now, the latest, as I said, is essentially regarding Bitcoin maybe slipping, but it's not slipping that much to also be fairly honest as well. As I explained yesterday, during every war or announcement or tariff news we've had, the crypto space has plunged into the ground. Yet during this war, where there are 20 countries involved, essentially regarding the Gulf countries and some other countries that are involved in this Middle Eastern war right now with Israel, US, and Iran, the crypto space has been able to keep itself stable. It hasn't plunged into the ground, with the Ukraine and Russian war when it did, or with China threatening Taiwan, or with the tariff news regarding Trump and essentially tech stocks when it came to essentially China in the US. Crypto back to back plunged, but this war, it didn't. It almost felt like the crypto space was holding still for something major to happen. And that's why we saw institutions back to back taking bigger leaps inside the crypto space because they knew this regulation would get passed one way or another. They got their one win, which is bad for certain crypto projects, but not so bad for the rest. And it also does go back to the feud that everybody saw between Brad just a week ago between Brad and Cardano's founder, essentially, where Cardano's founder said that Ripple is just trying to pass the regulations because it's in favor of them. And Cardano's founder was furious, and everybody saw what he had to say on X. And Well, it seems like the regulation that is going to be passed is actually more in favor of Ripple, XRP Ledger, XRP, and USD than any other crypto project out there. So you could say his feud was justified, but if you're somebody that's holding XRP or RLUSD or essentially operating on the XRP ledger or in favor of Ripple, you're in the clear pretty much. The latest market analysis also indicates that Bitcoin's recent price volatility is also signaling a potential bottom pretty much, and that Bitcoin can't go any lower. Even as traditional financial markets struggle with mounting macroeconomic essentially uncertainties, analysts suggest that the aggressive shakeout of leveraged positions in the 2026 digital economy has cleared the path for a more stable long-term accumulation by essentially institutional players. This divergence between the localized stability of the global ledger and the broader turbulence of the old guard banking sector highlights a growing shift towards decentralized settlement layers as a primary risk management tool for the modern era. The current market structure reveals several critical indicators within the world's financial architecture. Volatility compression as key support. Historically, the type of rapid price swings observed near essentially $70,000 marks precedes a period of trend reversals and suggesting that the national financial infrastructure is preparing for a fresh leg of growth. In other words, as I was saying, regarding every other news that we've had so far where crypto plunged into the ground with all the war news and the tariff news and everything else, while as this war, with so many countries involved, so many missiles flying about, the crypto space has held its ground. As I said, it's for the past week I've been saying it's almost like it's holding itself there for something to happen. Flight to high utility assets. As traditional equity and bond markets reel from inflationary pressures, professional allocators are increasingly utilizing regulated on ramps to rotate capital into transparent, hard capped digital assets. Institutional liquidity essentially mounts as well. The resilience of spot ETFs and corporate treasuries provides a functional floor that aligns with the oversight goals of the US Clarity Act, ensuring that the 2026 global economy remains anchored by verifiable on chain collateral. As the market navigates this period of TradeFi uncertainty, the focus remains on whether the decoupling of digital and traditional assets will become a permanent feature of the global commons going forward. Analysts suggest that the efficiency standards envisioned in the Genius Act are being tested in real time. With the ledger providing a more resilient plumbing than legacy essentially settlement layers, moving forward, the industry is watching for a definitive breakdown, essentially a breakout into its essentially price to confirm that the bottom is in for Bitcoin and pretty much its takeoff time. And it just perfectly aligns with this Clarity Act working in the sidelines of this major war that's going on. Now, on the topic of institutions taking massive leaps inside the crypto sector, which, with every behemoth from the institutional sector that takes a large step inside the crypto space, it just confirms us and shows us more confident that we're getting closer and closer and closer to that finishing line of that Clarity Act and now having that final draft bill. For example, Morgan Stanley today has released a strict report asserting that the current surge of institutional entry into digital asset space is not a reactive fear of missing out, but the result of years of internal infrastructure development. Remember all of those years inside the crypto space everyone's been in, the last year, the year before that, or the year before that. Every time we heard essentially good news and not much happened, especially for XRP. We would always hear the news of XRP and this company partners, and people said, but where's the price action? Or XRP essentially, or Ripple and that company, Ripple and this company, Ripple with this Singaporean company, Ripple with the Hong Kong company, Ripple with the Japanese company. And we never saw the movements and price actions. And I had to explain to everyone on the live shows that this isn't Hollywood, this is real life. And when two companies partner up, it doesn't mean the price goes through the roof tomorrow morning and everyone's a millionaire. I said, well, that happens. It goes into years of essentially, when two companies partner up in real life, it goes into years of research mode and spending money, time, resources to develop whatever they're developing in the background for the financial sector. And it just goes back to what essentially, Morgan Stanley is saying right now in 2026 that the reason why the institutional sector or high profile clients are taking bigger steps inside the crypto sector is not because they're feeling they're missing out on the crypto sector because of the speculation of money they can make, but the reason why the institutional sector and high net worth clients are entering right now by arm's length is because they said that the crypto space has reached a space right now where all the building is pretty much done, the infrastructure is pretty much done. And that's why they're entering the crypto space, not because they're feeling missing out, but because they think the crypto space is ready now. This deliberate transition signals a maturation of the 2026 digital economy, where global investment banks have moved from skepticism to active construction on essentially settlement layers. By integrating these technologies into their core offerings, the firm essentially argues that the national financial infrastructure is undergoing a permanent shift towards high utility ledgers based systems that offer superior efficiency over the legacy of the old guard plumbings. The bank's analysis highlights several structural pillars that have been in years of development for the crypto space. Multi year architectural planning. The report reveals from essentially Morgan Stanley today that major firms have spent their early 2020s building essentially the internal custody and compliance frameworks necessary to meet the rigorous oversight standards of essentially US Clarity Act. Morgan Stanley is telling us basically the crypto sector and the banking sector have pretty much been working together since 2020 until now, 2026. And that's why they're feeling now we're ready. The infrastructure is built. Institutional grade on ramps. The current wave of adoption is supported by a sophisticated network of regulated gateways, allowing trillions in traditional assets under management to migrate towards a unified ledger. Focus on total cost of ownership. Wall Street push is also driven by long term cost savings and inherent in real time goals envisioned by the Genie sector to replace a manual peak process. They've also said, Morgan Stanley, that they feel like 2020, they were preparing for a Clarity Act in 2026. That's huge that Morgan Stanley is coming out today and telling everyone it almost seems like back in 2020, the crypto sector and the banking sector and institutional sector knew of essentially a Clarity Act somewhere 5 years, 6 years down is going to be happening, and that they almost aligned themselves with essentially a thought of a Clarity Act, something similar to a Clarity Act happening in 2026, because everything that they built from 2020 until now goes under the compliance of that act. It fits into that act essentially perfectly, is what they're trying to say. As Morgan Stanley defines this era of planned adoption, they're calling it. Morgan Stanley is calling this era right now planned adoption, which again goes back to TikTok days when I used to tell people nothing, essentially in this world just happens willy nilly. Essentially, it's just a coincidence. I said everything on this at a large scale, especially involving money in this world, it's just very coordinated and nothing just happens, randomly or surprises here. It's more like it's a coordinated move, which is what they're saying right now. A planned adoption was happening since 2020. The focus remains on how these established institutions will compete with the native decentralized protocols. Analysts suggest that essentially the long game strategy positions the world's financial architecture for a period of sustained stability where digital assets are treated as standard components of a diversified portfolio. Moving forward, the industry is watching to see how essentially this deeply researched institutional presence will influence the next phase of the 2026 global economy, potentially also leading to the final displacements of a slow moving paper based system that once defined global finance. And it's not just Morgan Stanley that's coming out with perspectives today out of nowhere. On Coindesk, pretty much is their perspective. BNY Mellon's CEO also coming out and his thoughts that central role of global banking in the future of digital assets. Just to give you this one. The CEO of BNY Mellon essentially has stated that the long term viability and scaling of digital asset ecosystems essentially will depend on the participation infrastructure of major systematic banks also. This perspective suggests that while decentralized innovation provided the initial spark, the old guards of the financial world is also essential for providing the trust, custody, and regulatory frameworks required for a 2026 digital economy. What does this tell us? It means that banks like BNY Mellon, who are absolute behemoths in the financial sector, are on board and they're saying this digital world is going to happen and it's going to happen with us in it, which goes back to the oldest saying, which is if you can't beat them, join them, which is pretty much what happened inside the crypto sector. By primary bridge, the leadership is essentially, by Positioning the world's oldest bank as the primary bridge, the leadership is signaling that national financial infrastructure is ready to absorb high utility ledger technologies into its core operational model. The CEO of the bank visions for the world's financial architecture and emphasizes several critical pillars of institutional integration. So here they are, the pillars of essentially by the CEO of BNY Mellon, the oldest bank. Regulated custody as a foundation. The bank argues that for large scale institutional on ramps to function, assets must be held by fiduciaries that meet the same oversight and transparency standards as traditional deposits, which Ripple technically does. And Ripple is also with BNY Mellon, to be fairly honest. Interoperable settlement layers. BNY Mellon is focused on creating a unified ledger approach where digital assets can move essentially with the same rules of the road as fiat currency, ensuring seamless global commerce and treasury management, compliance with evolving frameworks. The bank's strategy is designed to align with the safety and stability goals of the US Clarity Act and providing a secure environment for the 2026 global economy to thrive without the risk of essentially a unshaded or unregulated platforms. As the firm continues to build out its digital capabilities, the focus remains on the balance between efficiency of the ledger and the resilience of essentially the legacy banking systems. Analysts suggest that this stance by BNY Mellon represents a functional application of the Genius Act also as essentially the gatekeepers of trust for institutions for the next generation of financial plumbing. Moving forward, the industry is also watching to see how this centralized approach will coexist with more bank model, so essentially becoming the definitive standard for institutional adoption of digital settlement lists. This pretty much tells us off the bat that the banks are pretty much on board now, especially now that they got that whole yield section out of it. They're pretty much on board to green light the rest of the crypto space. And having the final draft of the bill pretty much means we can also see the finishing line. Yesterday, I was explaining to everyone how the institutions can almost smell the money for the finishing line. It almost seems like we can start to smell the money from the finishing line too. There's more on Wall Street and major behemoths. For example, the next one we talk about essentially is Bernstein. But if we talk about Bernstein, let's go inside the comment section first. Let's see what's happening there, and then we'll go straight into the next news. Major institutional news right now to go through on tonight's live show. So let's see where we were at. So the comment section, we were here, I think. Yeah. Ray, good to see you. Addy, good to see you as well. JP, good evening all. Good to see you as well. How you doing? Hi, Miles and CMF. Hope everyone is doing well. Let's go, Ronnie. Everyone, retweet this live show. If you haven't retweeted this live show, CMF members, like this live show. Let's get this news out there because there's so much good news inside the crypto space, and I want pretty much everyone to hear it. Remember, Miles, Substacks too. He had another great one today. Let's go, Scott, for mentioning the Substacks. Let's go, Miles. Share the live. Let's go, Scott. Callie, good to see you. How you doing? I'm doing great, brother. How you doing? Hello, share the live, folks. Let's go, Scott. XRP, XRP, XRP. Evening, Miles and CMF. Jason, good to see you, brother. How you doing? Share the live. Let's go, Scott. Good evening, and everyone. Lottie, good to see you. How you doing? Let's go, Scott. Hi, Miles and CMF family. Good to see you guys. Let's go for facts news. Let's go through the how you doing, how you been. I was telling someone today if we were looking short term, that XRP, that 25 XRP at $1.40 today in 6 to 9 months, $10 to $100 is a nice pickup. I agree. It's either we're living in a simulation or it's all coordinated. The timing of everything just always seems to fit for it to be just a coincidence. Perfectly put, Shelley. Honestly, 100% perfectly put. Yeah, some people do argue the point that maybe we do live in a simulation, but also the argument of the point of everything's so coordinated in this world on a large scale is, I believe so, 100% it is. I personally essentially are looking long term for a goal to hold a certain number of permanently. Let's go, Miles. Keep sharing, my good brother. Let's go, Scott. The good thing about our communication and sharing of information in our group is neither Democrat, Republican, Liberal, Conservative, Independent, but forward thinking and planning facts. Miles, anything on XLM and H4 not swinging so far? XLM has their stakes on as we see the finish line. It will also do, in my eyes as well, incredible work. Excellent. I encourage everyone to review or view Miles' Substacks for today. Yesterday it was on point. Let's go, Scott, for mentioning that, brother. Hi, Miles and family. Let's go, Alex. How you doing? Definitely living in a simulation. Let's go, Ray. Now, Wall Street research firm Bernstein declares also that Bitcoin's bottom is in, and that essentially we're going to be heading on the essentially upscale. Not only that, but they are also reaffirming their $150,000 essentially price tag at the end. The prominent Wall Street brokerage firm today came out on CoinDesk. Essentially, Bernstein has issued a bold market call, officially declaring essentially a bottom for Bitcoin essentially following a period essentially uh, of, the prominent Wall Street brokerage firm Bernstein has issued also a bold market call, officially declaring a bottom for Bitcoin following a period of price consolidation in the 2026 century digital economy. In a research note essentially sent to institutional clients, analysts maintained their aggressive year-end price target of $150,000, citing a perfect storm of structural demand and maturing national financial infrastructure. This optimistic outlook also suggests that the current market phase is a temporary pause before a significant expansion of the global ledger valuation. Bernstein is trying to tell everyone that the crypto space, the position is stuck in right now, which is what I've been saying. This war is playing very different for the crypto space. It's not plunging as it usually does. It's almost, as I said previously, it's waiting for something to happen. It's exactly what Bernstein's trying to say. Bernstein's trying to say it's almost like the crypto space is waiting for its next leg up, it's waiting for its next big news, it's waiting for its next big regulation and is maturing essentially. This optimistic outlook suggests that the current market phase is a temporary pause before a significant expansion of essentially of the global ledger's valuation, driven by a continued integration of high utility digital assets into the world's financial architecture. Bernstein is telling everyone in the simplest words, prepare yourself for some integration to be happening regarding the crypto sector, essentially with utility projects, and the institutional sector, essentially the financial sector. The firm's bullish thesis is built upon several critical pillars of modern financial plumbing: institutional adoption, acceleration. Analysts point to a steady on ramp of capital from spot ETFs and corporate treasuries as a primary driver for long-term essentially price stability and upward momentum. Network hash rate and security. The report also highlights the record-breaking essentially resilience of the underlying network, suggesting that the fundamental security of the settlement layer is stronger than ever before, even amid the shift in essentially geopolitical landscapes that are happening right now in the Middle East. Regulatory clarity tailwinds. Bernstein suggests that the clear rules of the road established by the US Clarity Act are encouraging the old guard of finance, the traditional financial sector, to move from the sidelines into active, large scale allocations. That's crazy. They're telling, especially Bernstein, once again, is, just to give you a hint, they're trying to tell everyone right now the institutions are not only shifting away from the sidelines, not only are they entering the crypto space, but they're also doing it with large leaps inside the crypto space. As the market reacts to this high level endorsement, the focus remains on whether the current support essential levels will hold against broader macroeconomic headwinds. Analysts suggest that Bernstein's call reflects a flight to quality within the 2026 global economy, where Bitcoin or crypto sector essentially is increasingly viewed as a primary essentially collateral for a new transparent digital landscape. Moving forward, the industry is watching for essentially further signals of institutional accumulation as the transition towards the efficiency standards envisioned under the Genius Act essentially continues to redefine the boundaries of traditional and decentralized finance. Crazy signals essentially coming in from Bernstein right now. Huge market analyst, very respected essentially in Wall Street, is now trying to tell the crypto sector that, look, there's the institutional sector, the financial sector is no longer sitting on the sidelines. Not only are they, entering hand over fist inside the crypto sector, but they're also taking huge leaps inside the crypto sector, because now it's about integration and no longer sitting on the sidelines to see what happens. Again, it just tells us we're about to cross that finish line into regulations. But also, it said we have to see how it plays out going further into this war. So far, the crypto market space is, pretty much standing still, you could say. It goes a little bit down, goes a little bit up, goes a little bit down, goes a little bit up, but no plunging whatsoever, which a lot of people actually thought we're going to see more plunging happening inside the crypto space. But it hasn't came and it hasn't happened so far, even though the missiles still flying about. Even though we have news that the US is going to be, going into Iran using essentially troops this time around as well. So let's see how it reacts to that. And if it still stands still regarding that news, then we're definitely waiting for something to happen on a major scale if we don't plunge into the ground. Also, regarding another behemoth, Parafine Capital has successfully secured $125 million for a new venture fund for the crypto sector, demonstrating resilient institutional appetite despite broader volatility in 2026, the digital economy. This significant capital raise, first reported by Bloomberg today, highlights a strict move by professional allocators to double down on high utility protocols and decentralized settlement layers. Powerfly is trying to tell us the same thing Bernstein is trying to tell us, the same thing BNY Mellon is trying to tell us today, and the same thing Morgan Stanley is trying to tell us today. That not only institutions, one, enter the crypto space, two, they know that they're so close to that finish line, three, nobody's sitting on the sidelines anymore, four, it's all about the integrations right now, and five, it's about utility crypto projects, which everybody's at a CMF is pretty much from what I'm aware of is inside utility projects, and it's the only ones that matter, to be fairly honest. It just goes back to, if a long time ago, is the simplest way that I put the sentence that I used was, a long time ago I said, people were saying, should I go into this crypto project, that crypto project, and so on, in terms of also meme coins. And I said, look, if you were $1 billion CEO, what crypto project would you enter in for the first time after regulations? Would you go for frog token, camel token, giraffe token, is what I said? Or would you go for essentially established crypto projects, essentially XRP, XLM, HBAR, AVAX, Solana, Ethereum, Bitcoin, whatever you may want to go for. But if you're $1 billion CEO, that's what you're aiming for, not essentially camel token, frog token, cat token, donkey token, is what I told people to get out of. Not financial advice back then, not financial advice right now. But it is something right now that's been mentioned essentially by all these massive firms right now. Powerfly Capital, Bernstein, Morgan Stanley, BNY Mellon, today, they're all mentioning the exact same things, that it's all about the utility area right now. It's all about the regulation that's about to be passed. Nobody's sitting on the sidelines right now. And it also does go back to what Brad said as well. He was on a live stage about a week ago. Brad was on a live stage for some sort of essential Ripple event. And he was asked the question of, when are you going to flip the switch? And essentially, Ripple replied back with that there is essentially hundreds of switches that need to be essentially turned on. It's pretty much the gist that we're getting from these institutions right now, that one by one they are about to flip the switch. The new fund's deployment strategy focuses on several critical pillars of modern financial plumbing: infrastructure and middleware. A primary portion of the capital essentially is earmarked for the projects that enhance the world's financial architecture, especially those improving the interoperability between legacy banking systems and the unified ledger. So there's $125 million that Parafy essentially digital capital was able to raise. The $125 million. Where is it going towards? Is it going towards random crypto project? No. They actually said, they didn't mention which crypto projects, but they give us hints of where it's going towards. They said crypto projects that are about to change the financial sector, crypto projects that are about to bring massive amounts of utility towards the financial sector. You can almost tell which crypto projects is going to be that $125 million is going to go towards. And it's not just $125 million from Parafy Capital. When Parafy Capital does this movement of $125 million in particular crypto projects, it also essentially shows a wave of confidence towards those crypto projects. It shows a wave of confidence towards the crypto sector, which makes, if there is still any firm sitting on the sidelines, to jump in head first inside the crypto space. But according to essentially Bernstein, there's no more firms sitting on the sidelines anymore. Everybody's involved in the crypto sector. Institutional grade also, regarding tooling, the firm is prioritizing investments in secure custodial solutions and compliance-ready frameworks, ensuring that the necessary tools are all in place for the old guard of the finance to transition into digital native environments. As Powerfy begins deploying this $125 million, the focus remains on the long-term sustainability of decentralized finance as the core component of this global commerce. Analysts suggest that this raise essentially serves as a vote of confidence, that essentially in principles of essentially the Genius Act, and signals that sophisticated investors remain committed to the efficiency of on-chain essentially settlements. And moving forward, the industry is watching to see which specific protocols will benefit from this fresh influx of capital as the race to define the standard plumbing for the 2026 digital essentially landscape continues to intensify. So just to add more news on top of Morgan Stanley, essentially Bernstein and BNY Mellon and Parafy Capital, Invincico enters tokenization sector by assuming control of Superstate's $900 million on-chain fund. Invincico has officially entered the race for blockchain based asset management by taking over a $900 million on chain fund previously managed by Superstate. This strict essential acquisition signals a major transition for for such traditional investment firms as it moves to integrate decentralized settlement layers into its core product offerings for a 2026 digital economy. Invincico would never pull a $900 million deal inside the crypto sector if it wasn't confident enough of something big is about to happen. It's the simplest way to put it. By absorbing a significant pool of tokenized capital, Invincico is positioning itself to lead the modernization of national financial infrastructure, shifting away essentially from the manual essentially processing of the old guard towards a high utility, real time ledger system. The takeover highlights several critical advancements in the evolution of institutional financial plumbing. Direct on-chain management. Invincico is now managing assets natively on a public ledger, allowing for 24/7 transparency and near instant essential redemptions and cycles that are impossible within essentially the legacy banking systems. Institutional integration. The $900 million of fund serves as a regulated on-ramp for professional allocators seeking yield-bearing digital assets that meet the rigorous essentially oversight standards of the US Clarity Act. Also, the scalable tokenization framework. By leveraging Superstate's established technology, Investico essentially can now offer a unified ledger approach to a broader range of traditional securities, aligning with the efficiency goals envisioned in the Genius Act. As Investigo scales this new segment of its business, the focus remains on the long term impacts of migrating trillions of dollars in traditional assets under management onto decentralized infrastructure. Analysts suggest that this move represents a proof of concept for the world's financial architecture, demonstrating that major asset managers can safely and effectively operate within the 2026 global economy. Moving forward, the industry is also watching to see how quickly other large scale firms will follow Invincico's lead behind them and potentially triggering a massive wave of constellation between fintech innovators and established Wall Street giants. Pretty much they're saying, essentially, analysts are saying right now, if Invincico is about to take a $900 million essentially step inside the crypto sector, it's trying to prove a point. It's going to create a ripple effect. More companies are about to jump on that bandwagon as well. I mean, it's just fitting in perfectly with every other institution that we went through on tonight's live. Also, the New York Stock Exchange. The New York Stock Exchange essentially partners with securities to launch their tokenized stock platform now. The New York Stock Exchange has announced a landmark partnership with securities to develop a native platform for the issuance and trading of tokenized equity securities. Now, we've talked about the New York Stock Exchange, essentially the Nasdaq CEO, his news perspectives that essentially the Wall Street is about to go 24/7 on terms of tokenization, which is huge for the crypto sector, absolutely massive for the crypto sector. It just shows how much of a mature space we've become so far. Now there's the update essentially of a tokenized essentially platform with securities coming out of essentially Wall Street. This move represents a foundational shift in the national financial infrastructure essentially as the world's largest stock market essentially moves to integrate decentralized settlement layers into the heart of 2026 digital economy. By migrating traditional shares onto a unified ledger, the New York Stock Exchange aims to eliminate the T1 settlement cycles in favor of real-time essentially in terms of essentially real-time high quality environments that mirrors the 24/7 nature of modern global commerce. The collaboration with securities focuses on several transformative pillars of the world's financial architecture. Real-time asset settlements. The platform is designed to bypass the manual reconciliation process of the old guard, allowing the essentially for the instant transfers of ownerships and clearing the funds of point two error. Financial essentially equity ownership. Through tokenization, the New York Stock Exchange will enable division of high priced stocks into smaller essentially digital units, creating a more essentially range of global participants who previously faced high barriers to entry. Programmable compliance. Utilizing smart contracts, the platform can embed regulatory essential requirements, such as those envisioned by the US Clarity Act, directly into the digital securities, ensuring that every transaction is automatically adherent to the highest oversight and transparency standards. As the New York Stock Exchange scales this new essentially infrastructure, the focus remains on long-term impacts of emerging the security of traditional capital markets with the efficiency of the 2026 global economy. Analysts suggest that this move essentially serves as a definitive proof of concept for the Genius Act, in demonstrating that the ledger is no longer just essentially for alternative assets, but it is now the preferred plumbing for the world's most significant financial instruments. Moving forward, the industry is also watching to see how quickly other global essentially exchanges will follow this lead and potentially triggering a total overhaul of the legacy banking and brokerage systems in favor of a more resilient and automated digital landscape. So, the New York Stock Exchange giving us a hint. Securities is their platform. They're essentially creating their tokenized platform. Stock market is going 24/7. And they did receive their green light pretty much a few days ago to do this. Now they're just essentially telling us that we're doing it with securities. We're going to be launching that platform. We're creating that platform right now. Massive news on that sector as well. Again, they wouldn't take such a big leap if it wasn't a certain, essentially, certainty that the crypto space was going to get those regulations. Also, who else is trying to take a bigger leap inside the crypto sector and become legitimate? Tether. Tether appoints big four accounting firms to conduct a comprehensive audit of USDT reserves. The oldest, saying or reference or statement inside the crypto sector has pretty much been that Tether doesn't have the reserves it actually says it does. And, a lot of people say this. I've said this before. Tether essentially struggles to show reserves. And by not moving their headquarters to the United States, it makes it worse for them. There's a reason why they wouldn't get a green light in the EU. And it's not because essentially, Tether is being blacklisted by the EU, what the CEO of Tether was essentially possibly suggesting. Again, not as financial advice and any sort of advice, pretty much, or factual, essentially, you could say, because he could change his words. But what I am trying to say is, even Tether is now thinking we need to get ahead of the game. If we want to do that, we need to become legitimate, because it's all about legitimacy now when it comes to the crypto sector. Who actually is legitimate in the crypto sector and who isn't? And if you're not legitimate inside the crypto sector, if you don't have licensings, if you're not on paper, if you don't have regulations working in your favor, if you don't have essentially contracts in your favor, if you don't have NDAs in front of your favor, or any other backings or companies or anything you've done, acquisitions, then you're pretty much nobody inside the crypto sector when those regulations get passed. So, in a landmark move for the stablecoin industry, Tether has officially engaged with four of the biggest accounting firms to perform a full audit of USDT reserves. This decision marks a significant escalation from previous essential reports, aiming to provide the highest level of assurance regarding the backing of the world's liquid digital asset, the largest liquid digital asset, by opening its books to top tier global auditors. Tether is seeking to solidify its position as the cornerstone of the national financial infrastructure, ensuring that its primary settlement layer essentially remains a trusted on-ramp for 2026 digital economy. Now, Tether could have done this last year. They could have done this the year before. They could have done this the year before, the year before, the year before. You get the picture. Why are they doing it right now? Why is Tether all of a sudden decide to hire four massive accounting firms to look at their books? Because even Tether knows that we're about to cross that finishing line in terms of regulations. And once we cross that finishing line of regulations, from that point on, it's all about which crypto project actually has what it says it has and what crypto project has been bluffing for the longest time. Because the crypto projects that have been bluffing for the longest time wouldn't be continuously going up after the essentially regulations are passed and used for their utility, because they've been bluffing. Whereas the crypto projects that actually have utility will be the ones climbing the ranks. And if Tether or USDT wants to climb those ranks and be seen as this mature, essentially, cornerstone is how they're describing it of the stablecoin sector, then they need these books. The transition to a full-scale audit focuses on the several critical essentially pillars of transparency and global commerce. Verification of high-quality liquid assets. The audit will provide independent confirmation of Tether's holdings, including U.S. Treasuries, cash equivalents, and aligning with the string reserves and requirements envisioned in the U.S. Clarity Act. It's the only reason they're doing it right now. It's the only reason they're doing it, because of the Clarity Act that's about to be passed, the stablecoin yield, everything about to be passed. And that's why they've chosen right now. Again, it's just, as I say, it's just telling us we are so close to passing that finishing line. Institutional trust and integration. By integrating essentially by securing a Big Four signature, Tether aims to remove the transparency tax that has historically made some members of the old guard hesitant to fully integrate into USDT into their core financial plumbing. That also tells us that major institutional firms don't really like touching USDT. If Tether is doing this right now, because it seems like Tether thought maybe to themselves they can just swing past life inside the crypto sector and they will always remain the king of stablecoins. But this tells us that Tether is standing on shaky grounds and they've realized they're standing on shaky grounds and nobody on a large scale or a huge institution is not really utilizing them. And that's if Tether wants to be a part of this digital future, then it needs to essentially do this audit and it needs to prove that it does have what it says it has. But that still doesn't mean the institutions are guaranteed to use it in any sort of a way. But at least it's, some sort of a confidence for Tether. It's a confidence boost for the market space, you could say as well. Regulatory alignments. This proactive step is seen as a strict response to the oversight goals of Genius Act, demonstrating that the largest stablecoin issuer is prepared to meet the same standards as traditional systematic banking institutions. As the audit process begins, the focus remains on the long term stability of the world's financial architecture, and analysts also suggest that the successful Big Four audits could trigger a massive influx of institutional capital as fiduciaries gain the necessary comfort to utilize USDT for large scale settlement and treasury movements and managements. Moving forward, the industry is also watching closely to see if this level of disclosure will become the rules of the road for all major issuers, effectively bridging the gap between decentralized innovation and established rigors essentially of the global banking sector. Also, on top of essentially even Tether is, pretty much taking the next step to secure their place inside of this regulatory essentially, foundation that it's right now we're inside the crypto sector of. Coinbase, also to add on top of that, identified the second wave inside the crypto sector, which is institutional capital driven essentially by on chain yields. So, Coinbase has reported that a secondary, more sophisticated wave of institutional investment has also officially arrived in 2026 digital economy, shifting the focus from simple price exposure to an active yield generation. Unlike the initial phase of passive accumulation, this new influx of capital is also targeting high utility settlement layers that offer programmatic essentially returns through staking and decentralized lending. Now we know that the Clarity Act essentially that's about to be passed, the Genius Act, the yield situation is in favor of the banks, but the rest of the regulation is in favor of certain crypto projects getting passed. So Coinbase is trying to figure out what to do in that sense. By utilizing the ledger as a proactive asset rather than just a store of value, global asset managers are integrating digital finance into their core national financial infrastructure, moving beyond the static models of the old guard, and the exchange's latest market analysis highlights several critical drivers for this yield focused transition. The rise of the internet bonds is what Tether essentially is what essentially Coinbase is calling it. The rise of the internet bonds is one of their pillars. Institutional allocators are increasingly viewing proof of stake rewards as a digital native version of sovereign debt, providing a transparent and predictable, essentially, on ramp for treasury managements. Capital efficiency via tokenization. By leveraging the world's financial architecture, firms can now earn essentially yield on tokenized real world assets such as private credit and money market funds, which offer higher automated efficiency than traditional banking essentially products. So even if stablecoins like Circle might struggle to give out some sort of yield, other crypto projects can still offer tokenized, essentially can still offer staking, especially through tokenization. So that's a positive. Regulatory guardrails, essentially in compliance. The emergence of this second wave is closely tied to the rules of the road established by the US Clarity Act, which are essentially provide the oversight necessary for this fiduciary to engage with complex financial plumbing and on-chain earnings. As this capital continues to deploy, the focus remains on long term sustainability by decentralized yields in a maturing global landscape. Analysts also suggest that this shift towards a productive capital aligns with the efficiency goals of the Genius sector, potentially triggering a massive migration of liquidity away from dormant essentially accounts into the crypto space. Now, putting aside essentially Coinbase saying, look, even though staking is a you could say bit of an issue on stable coins, but staking is still going to be available for tokenization projects, which is huge for the institutional sector, huge for high profile clients, huge for family offices, for hedge funds, for institutions, and even for the crypto space that if they want to go towards tokenizations. But now, moving on from essentially Coinbase, to XRP. But before we talk about XRP and Ripple news, let's go to that comment section first. Let's see what's happening there, and then we go straight into the next news. As I said, so much positive news, institutional positive news we went from tonight's live show, telling us how close we are. Now, let's see where we were at in the comment section. Big Truck, what do I do with coins in my bag that are down 90%? Martin, if it's a legitimate crypto project, you can always, not financial advice whatsoever, whatever I say, essentially. You could essentially add more if it's a legitimate crypto project. If it's not a legitimate project, essentially, and it's down 90%, in most cases, it won't be coming back up. But if it's a legitimate crypto project, it's going to bounce back. Keeping my eyes on BlackRock, JP Morgan, and Bank of America, I see American Express sneaking in there soon. I agree. XRP, XNM, H4XDC. Let's go. Scott, hi Miles, and CMF. Peg, good to see you. How you doing? How you been? CMF, aka the Daily Family Reunion. Let's go, Scott. Hi Miles, good to see you. Hope you and your family are doing well. Carl, good to see you. How you doing? How you been? Miles, can you please share with me the list of tokenized golds and silvers I want to invest into the market? I already private messaged you. Thank you in advance for your precious list. Carl, I'll send you a list after this live show. Sorry about that. That should have another good job. I was just going. Scott, tokenization is the world in the financial system. Is the world in the financial system? Yes. I think that our patience with XRP is paying off as we speak. It hasn't made essentially known at the right price level or to the amount of institutions. I can't wait for the NDAs to start being disclosed. Facts. Yes, JP, let's go. Yes. I personally dollar cost average weekly on XRP. My plan is to maintain my personal goal and keep a little extra in case I need it for an emergency, essentially. Fair enough. Thanks, Miles. Appreciate it. No problem, Martin, anytime. Please excuse my writing errors. No problem, Scott. Now, XRP, Swift, and pretty much a lot of things that are happening in that segment as well. XRP and Swift, a convergence of legacy systems and decentralized settlements. So, if you didn't see it, essentially yesterday or today, there was a document that was released from Swift of all the banks that are on board with the testings that they're doing right now. But on that list, about 90% of them were also Ripple partners. So, here is essentially what's going on. The global financial landscape is currently witnessing a historical collision between traditional banking infrastructure and high utility digital assets. As the Bank for International Settlements also confirms XRP has broken into the top 5 crypto exposures for banks, and Swift essentially integrates Ripple linked institutions into its new payment essentially framework, it is clear that 2026 digital economy is no longer a theoretical concept, and that this intertwining of reports suggests that the old guard of finance is moving past the stage of resistance and is now actively building on ramps necessary to utilize decentralized settlement layers as core components of the world's financial architecture. The convergence of these 4 major developments in a single day essentially tells this. These are pretty much in bullet points, is the best way I could share it with you. Institutional strict exposure. The Bank of International Settlements data essentially today confirms that systematic banks are now holding XRP as a top tier digital asset, treating it as a legitimate tool for treasury management rather than speculative instruments. What does that tell us? The report that the Bank of International Settlements released today, essentially, if you didn't see it, what does that tell us when XRP is ranking in their top 5 of essentially banks institutions holding it? Well, it essentially pretty much makes Swift look like a moron. And I'll explain why. Because if everybody remembers, Swift sent out a tweet that said, nobody, and I mean, essentially, this is what they said. And a lot of people mocked Swift from the XRP side, and a lot of people praised Swift from the XRP hater side. And by Swift essentially saying, nobody's going to use XRP, nobody's going to utilize Ripple, and so on. But then today, you have a document released from the Bank of International Settlements, is pretty much saying, the simplest way to put it, the Bank of International Settlements data confirms that systematic banks are now holding XRP as a top tier digital asset, treating it as a legitimate tool for treasury management rather than speculative instruments, which just pretty much makes Swift's tweet look out of hatred. I did say when essentially, firms like Swift or anybody out there decides to point fingers at XRP and bully XRP and say, we're better than XRP. Ripple's lying to people. Nobody's going to use XRP. And it's not just XRP haters that send out these tweets. It's also essentially firms like Swift, which is quite embarrassing for them to do so. It just shows you that they're threatened by XRP and that they're empty threats. Pretty much they're bluffs. They're lies, you could pretty much say, when Swift tweets out saying nobody's going to use Ripple, nobody's going to use the XRP ledger. And so many people praised that tweet as if it was factual information because it's coming from Swift. But then you have the Bank of International Settlements saying, no, no, on our data sheet today, it shows that XRP is in the top 5 in terms of banks holding it. The hybrid settlement era also, Swift's inclusion of Ripple-linked banks suggests a move towards a unified ledger approach as well, where legacy messaging rails and decentralized liquidity pools work in tandem to facilitate global commerce. There's also essentially a list that was released from Swift of all the banks that are on board with them, and about 99%, you could say, are all Ripple partners, which gives two indications. One, Swift essentially has finally decided to give in and work with Ripple, or two, Ripple is taking the competition away from them, pretty much taking everything away from them, you could say. Adherence to global standards. XRP's alignment with BlackRock's key essentially criteria indicates that the asset has met the rigorous transparency and oversight standards envisioned in the US Clarity Act, providing a green light for massive institutional capital. And let me just make this one thing very clear. Let's just say essentially XRP or Ripple takes the competition away from Swift. Happy days, they deserve it. For everything Ripple, the XRP ledger, XRP went through, with all the criticism from XRP hater influencers, which ironically hold XRP, or from essentially companies out there, even from Tether or even from Swift. If they take the competition for themselves, then Ripple and XRP deserves it. However, if Swift comes out with news that they're pretty much using the XRP ledger, that is an embarrassment to Swift. Not because the XRP ledger or Ripple is a bad company. No, no. Ripple, the XRP ledger is actually XRP, RLUSD, amazing, incredible. What is embarrassment is essentially of Swift's tweet about nobody's going to use the XRP ledger, nobody's going to use Ripple. Because if news comes out that Swift is using them, and essentially is partnered with Ripple in some sort of a way, then it's very embarrassing for them that they made such a moronic tweet, you could pretty much say, or very hatred tweet. It's very embarrassing for them. It almost looks like they're bending a knee towards Ripple because they have no other option. Swift's competitive response, the banking of that 50 essential list that they released, is pretty much, as I said, 99% pretty much of all Ripple partners are on that balance. The return is essentially the smart money pillar also. The return of high net worth Ripple millionaires to the market reflects a growing confidence also that the ledger's plumbing is becoming definitive in terms of standards for 2026 global economy. Modernization of the rules of the road is essentially what's being mentioned again. This intertwining highlights the real world application of Genius Act as both the banks and the protocols and the compete to offer for a more essentially most automated and cost effective financial plumbing in the financial in the modern era. Ultimately, the intertwining of these reports of essentially Ripple taking competition away from Swift, or essentially the bigger institutions, or essentially XRP being in the top 5 essentially list for banks holding essentially any sort of assets. Ultimately, the intertwining of these reports means that the great reset of global payment systems is well on the way. And while Swift is attempting to modernize its legacy architecture, the organic growth of XRP's utility within the banking sector provides a powerful proof of concept for more decentralized and transparent futures. Moving forward, the industry is watching to see if these two paths will eventually merge into a single or seamless global settlements layer, fundamentally redefining how value is moved and stored in the 2026 landscape and beyond. To add on top of essentially Ripple taking competition away from Swift, or Swift bending a knee to Ripple after that embarrassing tweet they sent out a while ago, Ripple is also accelerating a strategic expansion in Brazil aimed shifting national regulatory landscape. Ripple is rapidly scaling its operations in Brazil, also solidifying the country's position as a primary gateway for its enterprise grade settlement layer in Latin America. This expansion focuses on integrating XRP based liquidity solutions into the regional banking infrastructure, providing a high utility on ramp for businesses seeking essentially to modernize their cross border payment capabilities. By partnering with local financial institutions, the firm is establishing a more resilient national financial infrastructure that aligns with the high speed demands of the 2026 digital economy, effectively bypassing the slower, more cost legacy systems of the traditional banking sector. The growth of decentralized settlements in the region is also being shaped by several key regulatory operational developments, enhanced institutional connectivity. Ripple's focus on the Brazilian market space aims to provide real time liquidity for corporate treasuries, allowing for a seamless movement of capital across borders without the friction of traditional correspondent banking. Revised taxation frameworks. The Brazilian government's recent decision to adjust its approach to digital asset taxation also suggests essentially a strict move to foster domestic essential innovation and attract international investments into its financial plumbing. Alignments essentially with global standards. The ongoing expansion reflects the transparency and oversight goals that Ripple essentially has envisioned. Also, as Brazil continues to essentially refine its rules of the road for digital assets, the focus remains on long term impacts of those technologies on the broader Latin America, essentially, commerce environments. Analysts suggest that the combination of Ripple's infrastructure and also essentially a more favorable tax environment, it could trigger a wave of institutional adoption across the continent. Moving forward, the success of this expansion will likely serve as a blueprint for how other emerging markets can integrate high speed digital settlement layers into their existing essentially financial infrastructure and architecture, ensuring they remain competitive in the 2026 global economy. So far today, Bernstein, Morgan Stanley, BNY Mellon, Wall Street, Brazil, essentially, and even SWIFT, and even the Bank of International Settlements has told us the exact same thing. In bullet points to put it for you, one, nobody's sitting on the sidelines anymore from the institutional sector, according to Bernstein. Two, Wall Street has finally taken that leap after receiving a green light to build their tokenization platform Go 24/7. Three, the Bank of International Settlements has just told us pretty much that Ripple and XRP is in the clear in the top five. In terms of is anybody using XRP? The oldest question inside the crypto sector is anybody using XRP? Is really anybody using XRP? Because according to essentially XRP haters or according to Swift, nobody's using XRP. But according to Bank of International Settlements, it's in the top five of being used. It's actually third, if I'm not mistaken. And essentially, fourth, this is also telling us that essentially Morgan Stanley and BNY Mellon have just given a massive green light to the rest of the crypto sector as well to they're getting involved. It's all about foundations, it's all about regulations, and it's all about utility. And that Invisico taking that $900 million leap that we talked about inside the crypto sector again confirms the regulations about to be passed. We've just received the final drift bill of that, essentially the bill that's going to be passed for the Clarity Act. And with the discussions that were going on between Brad essentially and the Charles from the Cardano Foundation, essentially in terms of the rules that are being passed in favor of Ripple XRP, it does seem so. The regulations that are being passed are actually in favor of XRP Ledger, XRP, RLUSD, and Ripple than any other crypto project out there. So if you're holding those assets or you're a big fan of Ripple, you're in the clear. Your future is looking absolutely incredible. Simplest way to put it. And also, one other thing that was reaffirmed by essentially BNY Mellon, by Morgan Stanley, is that the crypto sector right now is somewhat standing still. It's not plunging into the ground as it usually does on every other war or any other bad news that's coming on, or any other geopolitical tension that essentially happens inside in the world. The crypto space is the first one to plunge into the ground. And it's difficult for it to get back up for a little while. But this time around, it's pretty much standing still, it's standing its ground when there are roughly, 10 to 20 countries in battle right now. So it's telling us it's preparing for something major if it's not hitting the ground. We had tariff news and crypto was on shaky grounds and hitting headfirst into the ground. We had China and US news and the same thing was happening. So, simplest way to put it, finishing line closer than ever. Crypto sector is getting more adopted more than ever in terms of investments coming in. And the XRP ledger, Ripple, Aura USD, and XRP is looking better than ever before. On that note, we have reached the endings of tonight's live. This was the live, essentially, this was a CMF live show. Stands for Crypto Mouse Family. My name is Miles. You can tune into this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, this was episode 463 of the CMF live show. Like, retweet, comment, share if you already haven't. If you have, thank you so much. If you subscribed and followed to me during this live show, thank you so much as well. And if you haven't already, check out my Substacks. I release one Substack per day. And if you haven't still checked them out, you can listen to them or read them, and it's completely free. Go and check them out. It's incredible. Essentially, I've broken down so much of how the world operates, especially the Substacks that I released yesterday and today, and the one that's coming out tomorrow. Incredible. Absolutely incredible. Now, before we do go, let's go to the comment section first. What's happening there? Where were we? We were here. Let's support our group, and we truly believe our own products. Let's go. Since I am the one of the OGs in the group, I will assort that many millionaires in this group and more to be made based on the success of XRP. We'll talk. Let's go. We have discussed other cryptos over the last 2 to 3 years that would put many of us in great financial situations too. There's so much knowledge, wisdom, power, and connections in this group is invaluable. Let's go, CMF. Let's go, Scott. Miles, I haven't essentially asked in a while, can I still invest? One of the OGs from original questions. Let's go, Scott. Definitely. When the time comes, definitely. Great stuff tonight. Feel great tonight about the news. Let's go, Scott. Thank you, Miles. Good night, everyone. Let's go, Stormy. See you tomorrow, same time as usual. Cheers, Big Truck. Over and out. Let's go, Martin. See you tomorrow at the same time as usual. Good night, Miles, and all the CMF. Thank you guys for great live and news. Let's go, JP. See you tomorrow, same time as usual. Amazing news tonight. We're almost at the finishing line. Thanks, Miles. Good night, Comatose. See you tomorrow at the same time as usual as well. Peace. Let's go. Great live, Miles, and thank you. Great night, Miles. Good night, Miles and CMF. Jason, see you tomorrow at the same time as usual. Good night, Miles and CMF. Great news, Miles. Thanks, and see you tomorrow. Freedom forever. See you tomorrow sometimes as usual as well. So, Miles, but you can't go now. Let's go. Let's go. Hi, Miles. Why we Good night, Miles, and thanks again, Miles, for another great evening. Let's go see tomorrow sometime as usual. Episode 463, outstanding as always. Keep up the great work and take care, Miles, the CMF. Let's go, Ray. See you tomorrow, but at the same time as usual as well. Good night, everyone. Let's go, Lottie. See you tomorrow, same time as usual. Great information always, Miles. Thank you for your time. See you all tomorrow, CMF. Shelly, see you tomorrow, same time as usual as well. Good night, Miles, and thanks for the live show. Look forward to receiving your tokenized list after the live show. Many thanks. Let's go, Carl. I definitely won't forget. Yep. Why stablecoin yield is not accepted by USA? It's okay because we got the tokenization staking instead. Don't forget to put a comment outside the live on YouTube once it has finished, and go back and comment facts. Put a comment outside the live, CMF CMF members also put comments outside the live on X and on YouTube if you haven't already done that as well. Good night, everyone. I had a blast. Let's go, Scott. Good night, Miles. It's amazing to hear that much nice news. Let's go, Cali. I will see everybody tomorrow, same time as usual, 10 p.m. UK time onwards. As usual, great job, Miles. See all of my wonderful family members tomorrow. Pray for it. Let's go, Scott. See you tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. Love you all. See you tomorrow for episode 464 of the CMF Live Show.